Hey guys, DJ from PTA. Want to go over these stocks for today, um, August 8th. Um, what I'm looking at right now is how the SPY is reacting. So you got the previous week high here. You got previous month high here, and we see that it pulled back down in there. Ideally, this looks like this may be the change in direction, a turn, maybe some type of turn in the overall market. We shall see over the next couple of days. But remember, the fundamentals overall shows that we need to be down more so than being up. So that's why I'm just a firm advocate of going with the trend. Play the price action for that day, but don't ever forget about the overall trend of where we're headed. I feel we're still headed lower, and we should see how things work out and plan out in that situation. So, got a few stocks that I'm gonna go over with you guys today. One of the key aspects, I want to go over my loser and my winner. Still turned out to be a green day overall, but as far as the actual trade, the fundamentals are going over it. What went wrong, why it went wrong. We're going to go over each part of that. So the first trade that I want to go over is BBBY, Bed Bath and Beyond. Something I've played a few times. This stock overall don't hold up. It's just one of those stocks that as soon as it gets some momentum, it'll give it all right back. It's a really weird stock in general because of how it moves. I don't personally care for the way it moves, but I'm aware of it. But it does pay out. It's one of those things that, hey, if it pay out, it's on the list. So it's one of those things that I keep in mind when I'm trading and I'm looking at areas and I say, hey man, this stock is doing X, Y, Z. I always look at those type of things. So I think I want to do this at 17. And sometimes I leave these up here just so I can get an idea of what's going on or whatever. So that 1260 was a critical area off the daily. Now, let's break this down to the 30-minute. We had this massive rip into that 1260. When it rejected, ideally I would want it to go back up there. The problem is that it just didn't have the momentum. So the breakout down in the 5 minutes, so I can show you the key areas of support and resistance that I was using. I was looking at this from a standpoint of, okay, 1075 was a critical area. Let's go back over here, and right there. So as you can see, 1075 was that critical area. Came back, and that's what they caused the trap. After they broke it up, they crossed the trap, and then they ripped it right into that area and then pulled it back. So when they pulled it back to 1075, I figured that was the area that it was going to bounce off of. I was waiting for it to bounce, pull back, and then take off. I didn't get the full pullback, and I think that's the reason why it just didn't hold. I end up getting in at 1175. So ultimately at 1175, right here, this is how I was viewing the trade. Ultimately, it went up, so it created support. It pulled back, so I was waiting for this pullback. When I saw this pullback, I'm thinking, okay, we ready to go. And it looks like a lot of traders thought the same thing too. Shot up, went to 1234, and then slammed. I didn't take profit. I let it rip and slam and go against me. My risk was here. My risk was exactly at 1140. So I did have a hard risk, which is when you come off of a big a big stellar week of losses and you taking a big hit. I lost about 15 grand last week. You learn to really respect your risk. You get in and out. So I had about a 35-cent risk because range was there, all the attributes was there. My thought process, and let me kind of type that up so you guys can see it. What I was thinking is that the stock would take off, pull back, take off, hit this line, maybe slam, or maybe go this way. I was thinking it was going to take out this area and keep going. That was my thought, and I was just getting in a little early, which was here. But ultimately, it did the exact opposite, and that's why you have to have a certain bias. Now, looking at it overall, I mean, you look at it, it went this high, and this was bound to do what it did. You get what I'm saying? So, ultimately, the overall trend was telling me to go down, go short. But you know, I wasn't looking at it that way for whatever reason. So when it bounced, it ended up going right back to that entry and then going higher. So for some people, they look at it and they might say, hey, that was just bad timing. I think overall, I respected my risk and I just didn't see the chart fully. I didn't see the chart as it would be in a down play. I was thinking it was up. And that's why that in particular was a loser. So would I've done anything different? Yeah, I would have took profit, obviously, instead of letting it ride. And maybe that's a little bit of greed. Maybe it's from last week, a little bit of jitters or whatever the case may be. But I definitely should have took profit on this, understanding the climate that we're in. I mean, we are technically still in a downtrend. So all stocks in general, 2/3 of the market goes with the SPY. And that's why most traders watch the SPY or watch the minis so they can understand what the overall market is thinking. The overall market in itself is down. So it's like I should have just took profit at the end of the day. So respect my risk, 35-cent risk on this. I got hit, knocked out as you can see, and that take it from there. The next stock I'm going to go over is the winner. The winner was AMC. Now, AMC, as I tell a lot of people, you know, I've got a swing account and I have a day trading account. Now, why do I have two different accounts? Well, for me, it's easier to maintain because my strategies and stuff, I'm not maintaining them all in one arena. Now, my entry on that one is 1168. That's my long-term swing on that. But let's talk about the actual breakdown of the stock. So there was areas in this that, you know, if you had been playing and looking at it from that point of view, you could have did very well. I always try to look at the stock for what it is. I don't get into, well, it should have did this or it should have did that. I kind of just play the fundamentals. I just play it for what it is. I play the stock based on the fundamentals, on what it is doing. All that other stuff will get you in trouble in most cases. So when I was looking at this, I looked at this previous week high. I looked at all those key areas. I looked at all this area here. There's points of resistance, so on and so forth. I want to say 2370 was a good area as well. But I'm going to go back and look further in the chart. It was probably right there. Yep, it was about right there. Yeah, 2370. Yeah. So let's break this down. 30-minute. So we had this massive rip from the day before, right off that 1965. And then you see how right there at 2370, they trapped everyone underneath there and then ripped it to 27. Great move. I'm thinking and respecting the fact that the stock just ripped a massive move. I'm looking at it. I know that the 29 area is critical. I'm just looking at this for what it was. Now, what happened in this, what got me interested was to how it respected the previous area here, which was 24. I want to say it was 2465. Yeah. And paint that purple because it was entry day. 2465, they trapped, went back up, and this is where I got interested. So I'm thinking the overall trend is this, right? And I see that it's starting to do a perk move here. Now this is just on the 5 minute. And zoom in on the 1 minute, you start to see the pendant for what it is. And that's when I got interested, right there. So my entry on that was 2561. Let's see something here. Right there. So my first entry, or my entry, was at 2561. Right there. So when it took off really quick like that, and give or take that I'm already down for the day, I took some shares off just so that I can feel good. And I always recommend that, especially if you're coming off of a bad week or a bad trading day. You know, even if you size down and you just get a small win, it does something to your psyche. It helps you get better at the trade and stay focused on the pattern. So once I took a little bit profit, I was comfortable. So then after that, it actually went to full dollar. Now, anyone who knows me is that, hey, if I got, X amount of shares, I'm going to probably take off a good 50, 75% of those shares at $1. This stock can go $20. But on my day trading account, I'm here to make money, get those profits. A dollar gain, dollar move on any stock is a good move. So take it. And when I saw that dollar, I took majority of the shares off, and then I ended up breaking even on the rest here. So was it a good trade? It was a decent trade. Did I get what I thought it was going to do? No. I thought it was going to probably reach back out to 29. So I was looking for a $2-3 gain and at least a $4 gain. I was going to average it out about $280 and then let it go and probably hold on to the rest. So that would have been a second swing because I'm still swinging shares from 1168, but I wanted to take that gripe right there. Now, one of the things that I would have done differently in the trade is I definitely probably would have joined the party early on. Looking back on it at 2370 was a good area to risk off of. And to look at that, you would have had to go into, I want to say, the 15 minute and really look at the stock. So when it actually hit this high here, your goal should have been to look at pulling in somewhere around here and getting in that stock. So I would have looked for the perk move there. Let's break down to the 5. So we had our break, come down, and then it came back and respected. So somewhere right here, first thing in the morning would have been your ideal move on that stock. So it probably would have been right here on the break. So you would have risked, that would have been an incredible risk. So I probably would have got in probably here, risking to here. Yeah, about 30. It would have been about a 30-cent risk, 40-cent risk. Because this big rejection counter would have made me feel more confident rejecting a 2370. We would definitely have had to take a trade there. And I mean, just from there, 2420, 27, that was a nice move. Very rapid, very strong move straight out the gate. But again, it's one of those things that you have to respect this stock and this movement. You got to respect what it's doing, respect the overall market so that you can take profit and move forward. So, those would probably be the things I would have done differently with the AMC trade. But, still a profitable day. You live and learn. The next stock I want to go over. Now, these are ones I did not play, but they did formulate a good strategy on these. One was GameStop. GameStop had a nice run, popped up on the radar, and had massive volume, 18 million. And this stock with the meme stocks and all that, I know people were looking at it, but it just had a nice move straight out the gate. You probably could have caught it off some support here at 42.60. Caught the bounce when it made double support here at 43.80. Squeezed in somewhere right there and took in a small profit. The problem, like I said, most of these stocks are not holding. They're not holding their gains. So respectively, you need to get in, you need to get out. If you're sitting around or waiting around or overstaying your welcome, 9 times out of 10, you're going to take a loss like I did on BBBY. I just overstayed my welcome. Once you get a good entry like this, you squeeze in about here at 44, it went to 45.60. That's a good $1.50 move. Take the profit and go. If you're sitting around too long, this is how you end up giving what you have or what you thought you were going to make that day back to the market. As we can clearly see, 45.45 was some type of resistance. And because of that, it kind of just faded for the rest of the day. So they used 45 to gather and then faded it the rest of the day. So GameStop wasn't a bad move at all, but it definitely was something to take a look at. A small gain, a small win. The next stock would be Hlbz. Now this one here really moved on the 8th. It really moved. It had 220 million worth in volume. Now granted, this only had a 40 million float, so it rotated its float very well. But on that day, and again, you always draw out your lines. So that was a breakdown there. So like I draw my lines, I look and see where it's hitting at the most, right there. So we'll just call that 110. Then you had some resistance here. We'll just call that 130. You had some support there, 265. Looked like you had a rejection, support rejection here. We call that 170. And that's about it. That's about what I see for now. So we go back, go down to the 5 and see what was going on. So on that day, look, you see how it broke away from this area. About 117, 120 break, took off, formed its first A, pulled back, found some support at 120. So this is entry day support. So make sure you draw your lines respectively. Now, as you can see, it came back, respected this area, and then pushed higher. So now when it's pushing higher, your goal is to wait for it to drop. So right here, I saw the drop, meaning it went back up, it found support. I wanted to come back up and then fall again. It found support right around at 130, 128. I call it 130. You would have squoze in somewhere around 139, give you a quick 10-cent risk, and then it shot up to 189. Pulled back, and kept going. Looked like it ended up going as high as 222 after hours. So it was a solid trade, I believe, because it was a small cap as far as the price. It was more of a similar to a penny stock, and because of that, people were all looking at it. This was the move that everybody was looking at. Why? It's affordable. You can load up. You know, if you got a account over PDT, you can load up very heavy into this stock. And 20-30 cent will yield you very well. So I think that was the reason why this stock was the way it was. But it was more so a patience game. It was more so you being patient with the trade. So as you can see here on the 1 minute, once it found support, it bounced, went back up, pulled back, bounced, and then this was your entry right around here, 138, 140, and then it took off. So HLBZ was a good winner. I know a few guys I talked to in the chat did very well on it, so congrats to them. This was a really solid trade overall. Now I'm gonna go over my SIGA trade and Twitter. So let me go over that now. The SIGA, I'm still sitting at shares 1684 or something like that. So 1684, we was still sitting in the trade. As you can see on the daily, you know, I'm down here. So let's clear these drawings here. Let's go here. So let's go to 1684. Green line. So I'm way back here. It's 1684. When we had this drop down, I was at 1632. It dipped below it and then it gathered itself really quick. So I loaded into the back of this. Once it respected it, and now it hasn't even came back, I can load into each one of these. But what I'm going to do is wait, because I like sitting where I'm at behind the weekly. So I'm going to let this week play out. It can get back down to here. As long as it's still making higher lows, I'm going to stay in that trade and continue to add into my position. I am not full size. I'm probably about half of the size that I normally be when I'm full size. So this trade is paying out lovely. It's just a solid trade altogether just because I'm already in it. So what I would like to do is see it go up a little bit more, maybe return back to 21 and then continue on and continue to go higher. And that's why that trade is working out very well. Now, my other swing trade was Twitter. Twitter is doing very well simply because of the price points. I'm at 40.46. So let me clear this out, give you a clear area of where I'm at. So I'm at 40.46. Did add into the stock. I wanted to go higher. As you can see, I'm sitting behind August 1st or the previous week low. So this stock has to pull all the way back down, which I just don't see. But I want to stay in this trade as long as I can. My price target of entry would probably be back up here. So if it starts to hemorrhaging out around 49, 50 bucks, I'm getting out. I probably start taking off at least 75% of the shares. But as long as it stays making higher lows week after week and climb its way up, I'm going to continue to add into those positions, size up as much as I can in the trade, and then, take profit. So a lot of times you might get a little money off the first, but the bigger money is in the swing because you can then add smart where you stay behind certain areas and then take profit when it breaks, or take profit if another week or so go past, or if it hit a critical area. Like on this one, if it probably closes below 41.78, I'm probably going to be taking profit just because that's will make the most sense. I don't want to give everything back, but I do want to allow the stock to breathe. I do want to allow the stock to do what it's supposed to be doing and allow it to work. Okay? So that's the key to swinging, is allowing the stock to work. Yeah, you might be up this much today or whatever, and then you come back in the next day and you're down. That's fine. You're looking at the overall picture of the stock and which way the market is going so that you could take full advantage of that. All right, gang. If you don't have any questions or concerns, leave them in the comment section. Click that like button. Click that subscribe button so you don't miss any of our videos. And as I always tell old traders and new, stay studying and stay focused.